Hi everyone, welcome to the session. This session is fully dedicated to AAT students who are sitting for the exam this month. There were some requests from some of my viewers to discuss company accounts, partnership accounts, and not-for-profit organizations' financial statements. I have already uploaded a video on company accounts, so I will put the link above so you can go and watch the video. In this session, I'll be discussing about a question relating to the partnership. Okay, so I'm not going to discuss the theory part. I'll just briefly explain you the steps that you need to follow in dealing with partnership accounts. Okay, so in partnership accounts, basically a partnership means there will be more than one owners. They are known as partners. Therefore, the profit should be shared between the partners based on agreed terms and conditions. If a partnership agreement exists, then all the partners should follow the agreement. Otherwise, partners should follow the partnership ordinance or the partnership act. So that is a normal procedure. So now let's look at the steps, the basic steps when dealing with partnership accounts. The first one is you need to open two accounts, which is current account and the capital account for partners to record all the transactions. Basically, the capital account is maintained uh, to record certain transactions such as capital contribution, capital introduced by the partners. Then the transactions such as goodwill adjustments. So basically, when you say goodwill adjustments, when a partner is admitted or retired from a partnership, then the goodwill has to be calculated and it has to be adjusted in the capital account. So that is the goodwill adjustment. And the third one is the revaluation of assets. So this is also required at the time of retiring or admission of a partner. Time to time, assets will have to be revalued uh, at the time of retiring or admission of a partner. So the assets will have to be revalued on that particular date, and capital account has to be adjusted accordingly. Okay, so basically all short-term adjustments, basically the short-term transactions or adjustments are not recorded in the capital account. Okay, so therefore please remember only capital contribution, goodwill adjustments, and revaluation of assets. Those kind of transactions will be recorded in the capital account. Then we need to maintain current account. So basically, all the short-term activities are recorded in this account, such as profit distribution. So we say profit appropriation to the partners after calculating the net profit, then interest on capital and interest on drawings, salaries, and these kind of transactions will be recorded in the current account. Then you need to calculate the profit. So as usual, you can take sales and other expenses and you can calculate the net profit. So after calculating the net profit has to be distributed among the partners. So before you distribute the net profit to the partners, what you need to do is you need to deduct certain expenses relating to the partners, okay, according to the partnership agreement. So if the partnership agreement says the partner should receive interest on capital, so that has to be deducted. And if the partnership agreement says the partner should receive salaries, so that also will have to be deducted. So likewise, the partner's salaries, interest on capital, and interest on current account, interest on drawings. So these kind of partnership related expenses should be deducted from the net profit. So this part is known as appropriation account. Okay. So this is we need to prepare to identify the net profit to be shared among the partners. Okay, so these are the basic steps that you need to follow in order to prepare the partnership accounts. So basically, we need to prepare current accounts, capital accounts, and basically we need to prepare the income statement and appropriation account to calculate the net profit and to share among the partners, to distribute the net profit among the partners. Now, in this regard, I have selected one question from the past papers. So now let's look at the following question and try to solve the question. Okay, so what you can do is you can go through the question, okay, pause the video and read the question thoroughly. Then you can prepare the required you can prepare the partner's current account and the partner's capital account. Okay, now let's try to solve this question. Anuhas, Devmi, and Lihini are in a partnership, ADL partners, sharing profit or losses in the ratio of 5:3:2 respectively. The partnership agreement provides the following. Interest on capital 10% per annum is paid on the opening capital account balances. Okay, so you are given the interest on capital. Devmi is entitled to receive a monthly salary of 50,000. The following balances were extracted from the trial balance of the partnership as at 31st December 2020. So now you are given the capital account balances, okay, and current account balances and the drawings. So straight away what we can do is we can take the opening balances in the current account and the capital account. Now, capital account, you have given, capital account you are given, so let's take the balance brought forward. How much? 6,000. This is basically in thousands, 6 million, 4.5 million, and 3 million. So these are the figures given. Then the current account balance is also given. Let's take the current account balance brought forward. Anuhas is 1.2 million, 1.2 million, and Devmi has a debit balance. So therefore you have to take it on the debit side. Okay, so which is 900,000, we'll take 900. Then Lihini has 600,000. So these are the opening balances. And also drawings, it has to be recorded in the current account. All short-term transactions should be recorded in the current account. Okay, so let's take drawings. So that will be 1.4 million, then 800,000 and 400,000. So these are the drawings. The net profit for the partnership for the year ended 31st December 2020 was 4.5 million. Now you are given the net profit. So what we need to calculate is the net profit for appropriation of net profit for appropriation. So we need to calculate the net profit to distribute the remaining profit to the. Let's prepare the net profit appropriation account. This is the appropriation account. Let's take the net profit. Net profit is 4,500,000. So we'll take it in thousands, 4.5 million. Then, so what we need to do is we need to record these transactions. Okay, so to calculate the profit to be distributed among among the partners. So first of all, let's take the interest on capital. How much is the interest on capital? So here what you can do is less interest on capital, 10% to be calculated. So The capital balance is 6 million. On 6 million, let's take 10%, which is 600,000, and Devmi is 4.5 million times 10%, which is 450,000. Then Lihini is 3,000 times 10%, which is 300,000. Okay, so that total comes to 1,350, which is 1,350,000. So this has to be deducted. Okay, so this interest on capital has to be accounted in the current account. So let's move on to the current account. So you can say interest on capital. Interest on capital. So that will be how much? 600, 450, and 300. Okay, so let's take 600, 450, and 300. Okay, so then you are given Devmi is entitled to receive a monthly salary of 50,000. Okay, so per month salary is 50,000. So therefore we need to account for salaries also. So that will be salaries. So you can say salaries. So you can say Devmi. Okay, so 50,000 per month for 12 months, that will be 600,000. So this 600,000 has to be deducted. Okay, then you can calculate the remaining profit. The remaining profit has to be distributed among the partners. You can say appropriation of profits, ADL. Okay, so that should be 10 out of 5 out of 10, 3 out of 10, 2 out of 10. Okay, so what is the profit to be appropriated? So that will be 4.5 million minus 1,350, 600. So that will be 2,550,000. Okay, so that is the profit to be distributed. So when you calculate 2,550,000 divided by 10 times 5, so that will be how much? That will be 1,275,000. Then 2,550,000 divided by 10 times 3, so that will be 765, and finally it will be 510. So this profit has to be recorded in the current account. The current account, you can say profit, share of profits. So that will be 1,275,000. Then we have 765. Then we have 510. Okay, so these are the share of profits. Now we have accounted the interest on capital, the salaries, and these also we have considered. The net profit also we have distributed. Then we have two more adjustments, which is with regard to the retirement of a partner. On 31st December, Lihini decided to retire from the partnership due to her family commitments, and Hanuas and Devmi agreed to continue the partnership, sharing profit and losses in the ratio of 3:2, respectively. So on this date, the retirement, the goodwill of the partnership was valued at 1.5 million as at 31st December 2020, and it was decided to adjust through the partner's capital account without creating a goodwill account. Okay, so you don't need to create a goodwill account. So what you need to do is the goodwill has to be credited to the all shareholders based on the old profit sharing ratio. Then that goodwill has to be debited to the capital account with the new shareholders with new profit sharing ratio. This is that simple. Okay, so without creating a goodwill account. Okay, so let's try to record this 1.5 million. So 1.5 million has to be credited to the all shareholders based on the all profit sharing ratio, which is 5:3:2. Okay, so 1.5 million divided by 10 times 5. Okay, so that will be 750. So goodwill has to be adjusted here. You can say goodwill. Okay, 750. Then 1.5 million divided by 10 times 3. So that will be 450. 1.5 million divided by 10 times 2. So that will be 300. Okay, so this has to be credited here. Then, so you need to remove. We are not going to open a goodwill account. So we need to credit. So we need to debit the new shareholders based on the new profit sharing, which is 3 to 2. Okay, so which means 1,500 divided by 5 times 3. So that will be to Anuhas, which will be 900,000. Then Devmi, that will be 1,500 divided by 5 times 2. So that will be how much? 600. Okay, Lini is the partner who is going to retire. Okay, so now we have recorded the goodwill adjustment as well. Now you are given the revaluation of certain assets. Non-current assets of the partnership were revalued on 31st December 2020. Okay, so you are given land and buildings and motor vehicles. Non-current assets were agreed to carry that revalued amount in the partnership accounts. So however, in this question, you are not required to prepare the financial position. So therefore, we don't need to show these figures. Only thing is we need to calculate the revaluation reserve, and that has to be accounted in the capital account. As you can see, the land and buildings revalued amount is 6 million. However, the cost was 8 million and the accumulated depreciation was 2.5 million. So therefore, as at 31st December, we had a net book value of how much? We had a net book value of 5.5 million. This is the net book value, 5.5 million. And here, the net book value is 4,000 minus 1,400,000. So that will be 2.6 million. So therefore, these assets were revalued at 6 million and 3 million. So therefore, what is our revaluation reserve account? So 6,000 minus 5,500, that will be 500. 3,000 minus 2,600, that will be 400. Okay. So therefore, total revaluation reserve should be 900,000. So this 900,000 has to be distributed among the partners based on these ratios. Okay. So you need to take 900,000 divided by 10 times 5. So that will give you, we can say, revaluation reserve adjustment. So that will be 450 to Hanwas and 270 to Devmi, and finally Lihini 180,000. Okay, so these are the basic adjustments. Okay, then it was decided to transfer the amount payable to Lihini at her retirement to a loan account. So this has to be whatever the amount payable to Lihini at the time of retirement has to be credited to a loan account. Okay, so since Lihini is retiring, so what you can do is you can transfer the current account to the Lihini's account, and the full amount will be removed from the capital account. Okay, so let's do the calculation. So Lihini's total balance is 1,410,000. Here 1,410,000. So therefore, you can say balance carried forward. It should be 1,010,000, and this will be transferred. This will be transferred to capital account. Okay, so that will be from current account. Then his total will be 3,300 plus 180 plus 1,010. The total will be 4,490, which means in millions, 4,490,000. This will be transferred to the loan account. Okay, and we'll take the rest of the balances. And we forgot to record the salaries. Here we recorded the profit for Devmi has to be, should receive 600,000 as salaries. The total will be 1,815,000 here, 1,815,000. So balance carried forward will be how much? 115. And with regard to Anuhas, the total will be 1.2600 and 1.275. So that will be 3,075,000, 3,075,000, and the remaining balance will be 1,675,000. Okay. Then the total capital account remaining balance for Devmi will be 5,220,000 total. And the balance carried forward will be 4,620. Then here the total will be 7,200,000, 7,200,000. Okay. The remaining balance will be 6,300,000. Okay. So these are the balances. So these are the closing balances. Okay. The remaining partners will be Anuhas and Devmi, and Lihini's account is transferred to the loan account. Okay. So this is the answer for this particular question. Okay. In my next video, I will try to discuss about not-for-profit organization accounting treatment, the financial statements. How do you prepare financials for not-for-profit organizations? In my next video, I will discuss. Okay. Until then, thanks for watching and bye for now. So if you have any questions, what you can do is you can comment below. So thank you very much and bye for now.